Hey everyone, welcome into another daily editorial here on the KE Report. I'm chatting with Jordan Roy-Byrne, founder and editor of The Daily Gold. And Jordan, we're going to focus on the precious metals, but more specifically focus on GDX, so the gold miners ETF. These are the larger gold miners. We have talked before, and I've been talking over the last couple of weeks as to just how well the large gold miners have been doing, and even the expectations for them to produce some pretty good quarterly financial results. But today, very noteworthy, as you and I are recording this, GDX is trading right around the 32, almost 33 region, which GDX hasn't touched that level since 2013. So this is almost a 7-year breakout. I know it's important to hold this into the close of the week, but share with us what's noteworthy about this rally in GDX, please.
Okay, well, there's two or three things. I think the first thing is you look at the way that the metals have been acting in the last 5 or 6 days, and they've clearly been in a correction, and we could say the same thing about GDX and GDXJ. But even as the metals have been correcting, just in the last couple of days, you've seen GDX and the rest of the ETS, they have held up really well. So it's been a period of weakness for the sector. And normally when that happens, you see the metals hold up better than the stocks. The stocks get hit harder than the metals. Well, they haven't. I mean, they've been holding up extremely well. I mean, you have basically, they've been making numerous white candles on the daily charts, which signals accumulation. I mean, a market can still go sideways or sell off and form a white candle in various days. And so you look at the largest stocks in recent days, Newmont and Barrick, a lot of white candles there. Same thing in GDX, GDXJ, signaling accumulation. And also, I mean, the chart of silver is really, it's like, man, it doesn't really look that good. It looks like it could come back to 14. But SIL and the silver stocks, they've been holding up really well. So the stocks have been holding up really well. That's a great sign. Secondly, last week GDX started to break out against the stock market. At one point, I think it was close to a 3.5-year high. Now, today's move, it looks like that's a clear breakout. Maybe it's broken out for good. It's definitely at a 3.5-year high. That's the most significant breakout in that ratio, really. I mean, in years, you might have to go back 10 years. I mean, you go back to the peak in GDX last summer and the 2016 peak. Relative to the stock market, at those points, I think it was like at a 2-year high. So it wasn't quite as much of a high as it has been now. And, the third thing, I mean, I kind of referenced it in the first thing, but I would just say, the stocks, GDX has made a new high well before, gold has. So that's relative strength. I guess that's kind of what I was saying the first time around. But yeah, I mean, to me, GDX outperforming the stock market and outperforming gold. And then in addition to that, just in recent days, the white candles in the sector signaling accumulation, despite the metals correcting. It's encouraging action. Oh, one more thing. I was looking at GDX and kind of comparing it to 2008 because, the gold stocks have made huge moves off various bottoms throughout history, and I've looked at some comparisons. And of course, history doesn't always repeat itself, but it's kind of similar to GDX in the way it kind of crashed and then it had this really sharp rebound. In that scenario, where we are now, it suggests that GDX should come back and retest the 50-day moving average. But I mean, even today with GDX, this like you said, the breakout has to hold into the end of the week. But I mean, it looks really good from where we're speaking now. I mean, it has a big gap, so maybe it refills that gap before going a lot higher. So in 2008, we're at the point where in 2008, GDX came back and it retested the 50-day moving average. So I've kind of been thinking and talking about, well, GDX is at resistance, gold's correcting. So maybe we correct now and maybe GDX comes back and retests the 50-day moving average. So not even close to doing that. Now it just makes a new high. So it just goes to show you, Corey, how amazing the strength has been. It's been even that much stronger than 2008. So it's just ridiculous how strong this market has been.
Okay, so really across the board, there are a lot of positives here on what is happening in the gold sector because the stocks are leading and again, because they are outperforming the US market. Still moving more or less hand in hand with the markets, but the outperformance is key. Jordan, can you make any assumptions or references to the type of investors that are in these stocks now? You mentioned that it's looking like accumulation from these charts and these candlesticks, but does that tell you anything about the investors that are coming into the larger stocks?
It's big money and it's generalists.
Now, are those solid people? Are those ones that could ride this longer? Or are these going to be short-term traders?
Well, I can't speak to their qualifications as people, but as investors, I would say yes. I think they're these they're accumulating. Big money is getting in. These aren't the types who are going to flip in and out. So yeah, they're probably looking to hold for a few years at least. So and that's a lot of times what we see in these moves where the big money comes in and then it trickles down. But even the trickle down things are already performing well. I mean, even silver juniors have been getting a bid. They've made huge moves off the bottom despite silver, not looking too hot at the moment. But yeah, I mean, to answer your question, yeah, it's big money and they're in for, at least a few years, I would think.
Okay, so all very encouraging. Does that mean that this is a buying opportunity because of the breakout? Or do you think there's going to be a test, even though there hasn't been that pullback to, say, that 50-day moving average?
It's a really good question, Corey. I'm not sure if it's going to, have a little retest here and fill that gap at 30-31 or not. Just the action over the last month or two, it surprised me. It's kind of run counter to my expectations at various times. Another point being I'm thinking we're going to correct here and the market breaks out instead. I would just look at individual stocks, and this is at times in past years this is a mistake I would make where I'd get too hung up on what's the market doing. I need the market to be perfect before I can buy this individual stock. For the people out there who are buying various individual stocks, just focus on where those stocks are. If this breakout holds, we're going to get a lot of. If it doesn't, you might get a little weakness in some stocks, but yeah, I would just focus on individual stocks in their own fundamentals and technicals, and not worry about the market because sooner or later the market is going to give us huge wind at our back.
Hey, you can make the argument that maybe even now it is starting to do that, but overall, the fact of the matter is the market, the precious metals market, is looking better, and we're even starting to see some money pretty aggressively go into some of those juniors, the gold juniors. Now, it still is a select handful of gold juniors that are doing very well. Does that continue to be your strategy when it comes to the junior stocks? I know in your newsletter you follow a handful of juniors, but I still think you need to stick with the higher quality juniors and not dabble in some of these marginal plays quite yet.
Yeah, it really depends what you're looking at. At the bottom you could buy the highest quality juniors, at least in my opinion. Everybody has their own definition of what highest quality is, but I have a list of like 8 of the highest quality ones, in my opinion. And at the bottom, or just like a week or two out, you can buy those and have a chance of getting a 10-bagger. Now that they've already moved a lot, you're probably looking at 5-baggers at the most in some of the highest quality ones that are not too big already. We're not talking about junior producers that have $1 billion market cap. But so it really depends what you're looking for. You can buy those, like I said, that, maybe depending on the stock, maybe it only has 3x potential or 5x potential. If you go down further on the risk curve, you can find things that have 10x potential or 7x potential, but fundamentally, there's probably a flaw here or there in some of those names. So it's a little more tricky. And so, what I would do is with those types of names, you want those to be smaller positions in your portfolio, whereas the best of breed ones that you still think have good enough potential, those could be more larger positions. So I mean, it really depends what you're looking at. There's a few things that I really like that I mean, I'm going to kind of clarify in my next weekend update. I mean, there's a couple things that I think have 10 bagger potential that are high quality, but the market doesn't think they're high quality yet. So it depends on what you're looking for as an investor. You really have to understand the company, what it's trying to do, what its potential value is, because you don't want to get into a situation where you're just going for everything that maybe this could be a 10 or like a 12 bagger, and you're just taking way too much risk. I would say, have a portfolio of names and, just make sure you have a few that are higher quality. And then, maybe you can have a few that are they're not high quality, but they could be 10 or 12 baggers potentially. So that's how I would look at it as far as a portfolio.
Okay, and I think that's important. Everyone gets caught up, oh, I need these 10 baggers. And 10 baggers are great, but that's usually because, at least the 10 bagger potential is because initially they do carry a bit more risk, especially compared to some of these higher quality juniors, which I think just protect you a little bit more from the downside. So, Jordan, one final question here. As optimistic as everything has been so far that we've been talking about and outlining in terms of the gold stocks and precious metals in general, what, in your eyes, could you see that could derail some of this bullishness? Maybe not all of it, but at least some of it?
I've been thinking about that yesterday, and this is not my area of expertise, but I would think it could be something related to oil or something else in the economy crashing. You get the second order effects of the recession where you get a lot of, people can't pay their bills. You get bankruptcies and, you have something happen in the currency markets where the dollar gets too strong and it forces some forced selling of gold. So those are the things that I would worry about. If we would see like a real correction in gold where we see it fall, a couple $100. So it's important to keep those in mind. But Corey, with that said, look at the price action right now. These markets are white hot. GDX is breaking out. So I would, it's important to keep those things, in the back of our mind. But here and now, if we're looking at the action in the market, the price action of the stocks, they're not concerned with that. They don't see any issue with that coming, at least in the short term.
All right, Jordan, we're going to wrap it up there. Thank you for your thoughts. And yeah, you know what? It is very encouraging the way that the gold stocks are moving. It is the majors, and hey, that's typically the way that it goes. Big money enters the big stocks first, and that drives more money into these stocks as the market broadly moves higher. And the outperformance compared to U.S. equity markets, remember, there is still that correlation there. But if there's this optimism in U.S. markets, it seems to be more money, at least on a percentage basis, is going into the precious metal stocks, which, again, very encouraging for all those precious metals bulls. Jordan, thanks for your time today, and I hope you have a good rest of your week.